Something's shifting. Quietly, but powerfully. Central banks around the world are losing faith in the US dollar, and Bitcoin may be the unexpected beneficiary. Welcome to the Digital Finance Daily News Show. Please take a second to hit that subscribe button while we bring you up to speed on what has been happening around the world in the digital finance space. Today, we break down the key dominoes. Fed credibility is under scrutiny, global reserve managers are diversifying away from US assets, and the world's trade structure is showing cracks. Meanwhile, Bitcoin is consolidating just below its all-time high, simmering with potential energy. Let's start with the global bombshell. UBS's latest survey reveals that 2/3 of the world's top reserve managers now doubt the Fed's independence. More worryingly, nearly 30% say they'll reduce exposure to US Treasuries and dollar-based assets. Their concerns? Political gridlock, rising US debt, and what they describe as erosion of the rule of law. It's the kind of slow-motion shift that doesn't make headlines, until it breaks something. Where's the money going? 40% are moving into gold. A quarter are looking to diversify into the euro, the renminbi, and yes, even crypto. That's right, state institutions are now openly considering Bitcoin as part of their diversification strategy. This isn't about memes or moonshots. It's about the erosion of trust, and what replaces it. Across the Atlantic, the European Central Bank just paused its 8th straight rate cut. The reason? Global trade uncertainty, driven in large part by unpredictable US tariffs. ECB officials are now walking a tightrope, managing inflation without destroying growth. And with a strengthening euro making exports more expensive, the pressure is building. Meanwhile, back in the US, the jobs data dropped a surprise. June added 147,000 new positions. Unemployment ticked up slightly to 4.1%, but not enough to trigger immediate policy changes. Translation? Rate cuts in July are likely off the table. Wall Street reacted with enthusiasm, tech stocks surged, but beneath that optimism lies concern. What happens if this strong data persists, and the Fed stays frozen while inflation creeps back? Let's talk crypto. Bitcoin is rallying, but it's a strategic rally. ETF inflows have now crossed $50 billion, driven by institutions seeking exposure without custody risk. Spot ETFs from BlackRock, Fidelity, and ARK are dominating flows, and for good reason. They offer regulated, low-friction access to what many now view as digital gold. Bitcoin reclaimed the $109,000 zone and is hovering near its record high. But this isn't a FOMO-driven spike. On-chain data shows a long-term accumulation trend. Exchange balances are drying up. Volatility is compressed. And $20 billion in monthly options are about to expire, setting the stage for a possible breakout, or breakdown. Behind the scenes, the quiet adoption continues. Sarah, a senior fund strategist, shared this: every time geopolitical risk flares, clients ask the same question: should we add Bitcoin? They're no longer asking if, they're asking how much. That's a profound shift in psychology. For decades, portfolio protection meant bonds and gold. Today, it includes Bitcoin. Now consider this timeline. July 9th, the U.S.EU tariff deadline. July 14th, France's budget vote. August, renewed US-China trade talks. Each event is a potential trigger, one that could either push Bitcoin through resistance or throw global markets into chaos. Gold is already telling the story. It's up 25% this year, outpacing equities, bonds, and even oil. The bond market is whispering too. Real yields are rising, indicating investors expect higher inflation without central bank support. Here's the playbook. Bitcoin's technical setup is classic pre-breakout. Low volatility, decreasing supply, strong institutional demand. If macro tensions ease, it could punch through $115,000. If they escalate, especially on the geopolitical front, we could see panic flows into BTC, gold, and other hard assets. So what should you do? First, don't chase. Dollar cost average. Start small, 1 to 3% of your portfolio. Use ETFs to avoid custody headaches. Stay close to headlines. This month is packed with landmines. And keep your strategy nimble. The market's not just reacting to charts, it's reacting to fear, to credibility gaps, to global realignments. The old world order was built on trust in the dollar. The new one? It might just run on code. Bitcoin isn't waiting for permission, It's quietly becoming the hedge of choice for institutions and individuals alike. Like, subscribe, and share this video if you're ready to navigate the storm. July isn't just another month. It's the macro crucible for Bitcoin. Stay sharp, stay calm, and stay informed.